It's over. The S&P just broke its 10-day winning streak, which is giving us a big warning here. Why? Well, after we broke our losing streak with one green day, the market reversed pretty dramatically by rallying nearly 8%. So now with this one red day, could that same thing be setting up here? Well, Jamie Dimon's talked about dark clouds. Now he's saying that there's lots of inflationary forces in front of us. And there's a really interesting quote here where he says that stocks are very high. Okay, well, we'll come back and talk about that a little bit later in the show. First, I want to remind you that today is the first day of the second half of the month, where the 1 month is a little bit shaky. But when we look 3, 6, and 12 months out, this gets a lot better. So the perfect storm is basically whether or not it's 1995, or if this time's not different. Remember, yesterday we went through and talked about this pattern. And thank you to the viewer who actually corrected me. I had a weekly chart, now it's a monthly. We have 1995, which we're looking at here, this rally that is insatiable, that rallies exponentially. So look at the pattern here now, which is tracking. We have 1995 on the left and today on the right. We have a downtrend which connects multiple lows and hits the downtrend. We have that same thing here in 2024. Then we bounce off the 50 monthly. Then we bounce off the 50 monthly. Then we bounce again. Then we bounce again. Then we get pretty close to hitting it, but don't quite get there, just like we did recently. Then we have a downtrend. Then we have a downtrend. Then we break the downtrend. Then we break the downtrend. Is that it? Is that all we needed to do? Are we really going to go higher from here? And as I look a little bit objectively, let's pretend we're about right here. Well, there's a little bit of a sell-off which happens into the second half of the month, going back to August of 1996. This is not meant to be like, oh, tomorrow we go exactly here, then we dip, then we rally. It's just a template. It's just a roadmap. I'm trying to think about what could really happen in the best and worst case scenario. Why? Well, the Dow average touched 40,000 for the first time before pulling back. What does that mean? People sold it off after it broke the key area. And what's interesting is that fear and greed is roughly where it was yesterday, even though we're closing down by a little bit. So is this a delayed effect? Well, we're going to find out. Whoa, whoa, whoa. What about the other side of the story? We can't just say we're bullish like it's 1995. And again, as Fed Williams has told us, what about the totality of the data? It's not about one data point, but Jamie Dimon is giving us some warnings here of inflationary pressure. Just before we look at that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So what he talks about here is that he's warned for months that rates could stay high. I want to read you a few quotes. Then we're going to look at some data points like GDP, like Fred, and we're going to go over here to look at some articles we reviewed yesterday. But let's just see what Jamie Dimon has to say. He's the most important banker after Jerome Powell. There is lots of inflationary pressures in front of us. The underlying inflation may not go away the way people expect it to. Okay. If rates go, if we have higher rates and God forbid stagflation, which I talked about before, you will see stress in real estate and leveraged companies and private credit. Stocks are very high, and I think the chance of inflation staying high or rates going up higher is higher than people think. My view is whatever the world is pricing in for a soft landing, I think the probability is about half of that. I think the chances of something going wrong are higher than people think. Uh-oh. Right? He's even ready in his shareholder letter. He says that he's ready for interest rates to go between 2 and 8% or even higher. Where are rates right now? Well, they're here at 5.3 and they're elevated. Okay, well, let's keep reading the article here. Blah, 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 right? Very tense geopolitical tension. We've talked about that, blah, 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 more stuff in here. So what he's basically talking about is that we have inflationary pressures. Well, look, GDP is at 3.59. That's pretty high, right? We're trying to get it back down to 2. The Fed can't even do that. If we look here to the Fed funds rate, well, we've talked about this before. If something broke in 2006 to 2008, you know what that was. It was the housing bubble. All right, well, that was 5%. In 2019, we had another taper tantrum with Jerome. And in 2006, this was when we had a 50% decline with tech stocks. Well, today, the situation is not much better. The U.S. debt situation is not good, but rates are higher than they were in 2019 when something broke. They're higher than they were in 2007 when something broke. But the debt situation in the U.S. is much worse today. Today, our debt to GDP is 122. In the 2000s, it was half of that at 57. So if something broke the system at 6%, and we're nearly there now, but we have twice as much debt, this kind of seems like a problem. Yeah, absolutely. This seems like a problem. So growth is high, which is good. But inflation is also high. We got high interest rates as well here. Let me just show you what I'm talking about. So U.S. inflation ebbs for first time in 6 months in relief for the Fed. What are they talking about? Well, they tell us right here. Core CPI cools for the first time in 6 months in relief for the Fed. Here's the part that I'm not convinced about. We can look at core CPI, which is right here. U.S. core CPI month over month. Exactly what they're talking about here. It cools for the first time in 6 months. So as we look here, we got high, higher high, double top, double top, double top, then a lower high. But if we now look down to these previous readings, this is where I think I understand what Jamie Dimon's saying here. Why? Revised higher, revised higher, revised higher. What were they before? 0.3, 0.3, 0.3. Oh, could that same thing be happening here? Because, hey, the headline number looks great when it's 0.3, but when it gets revised higher, people kind of forget about it. This shows there's underlying inflation here. This compounds at roughly 5% per year. That kind of seems like a problem. So is Jamie Dimon right? Or are we going to go higher anyway? Man, I don't know. I wish I knew the answers to everything. I can just show you what I'm looking at right now. So we just talked about the CPI, but now I want to briefly touch on something else here because we're seeing other large notable shareholders like Warren Buffett. I saw a quote. I forget where it was. Someone said, Warren Buffett is never going to tell you he was bearish, but his actions tell you when he's bearish. He's trimmed a substantial amount of Apple, a lot, 13% or 116 million shares. That's him voting with his dollars. He's selling what he appears to be more risky and going into things like Chubb. The stock had a nice day today as well. Scion Capital's Michael Burry is loading up on China stocks. JD, Baba are his two top holdings. And then over here, looking at Stanley Druckenmiller from Duquest Capital Family Office, he sold all of his Eli Lilly, and he's reduced his NVIDIA position by another 70%, selling a little bit in the last two reports, but now he's basically back down to a free position, and he's up by 400%. So he's out of Eli Lilly. He's out of NVIDIA for the most part. And Apple, Warren Buffett sold a whole bunch. So these guys are voting with their dollars in terms of where they think the market could go. And this is what I want to leave you with for a bit of hope here. So we talked about, so if the perfect storm is here, well, Jamie Dimon's going to probably be right. And it's going to be the end of the stock market. How do you get paid when everything goes to zero, though? You don't. That's why it's not good to bet on things collapsing. So if we're going to get a dip sometime between now and the end of the month, we talked about this yesterday, so please pay attention here. Why? We have multiple areas of support. If we dip by 1%, we fill the first hole. Then we watch for how it reacts. What should happen if the bulls are really greedy, like the fear and greed index tells us, is that we should bounce exactly right there. That's what the NASDAQ did yesterday. Let's look over here at QQQ. Why? It gap and goad. So we didn't even come down to actually fill the gap here. Where did people want to buy it up? Man, basically the all-time high. They're just like, screw it, get me in. I can't afford to be out. So if we dip by 1% between now and end of the month, hey, we watch for the reaction, right? If there's a perfect storm, we're going to blow through all these areas and we're going to print a monthly lower low. We've talked about this before, so I'm not going to beat that dead horse. So if we drop by 1% between now and end of the month, perfect. If we go down to 3%, man, that'd be a nasty dip. I would expect at least some relief on the 50 DMA. If we drop by 4.5%, now we're all the way down here. And the reason why this is particularly important, let me see if I can briefly pull this up here because we were talking about, what did I want to show here actually? So we talked about, let me just, 1 second here. So BTC, USD, let's go here to Bitcoin. Let's go to one-day chart. Let's go fast forward to today. There we go. And then we got SPX on the right-hand side here. Oops, SPX. And we've been talking about a one-day pattern. Let's zoom in. Because what Bitcoin did, and I don't know, right? This pattern definitely broke. It was good until it wasn't. But what I'm looking at here was that Bitcoin actually went to a lower low, right? Low, lower. So if the S&P doesn't just fill these lower gaps, it goes down by more than 5%, and then it also loses the monthly low, hey, all bets are off. That's the perfect storm that Jamie Dimon's talking about. We're going to get technical feedback that we got one area of support, two areas of support. We got the 50 DMA. That's 3. We got a 4th level of support here. If this is truly a staircase of support as we're going higher, we should be finding buyers here. I recognize a warning sign here too. Look, as the price goes up, what happens to the volume? Well, it goes down. So what that means is that people are less enthusiastic as the price goes up. There's a lack of sellers rally or a frictionless rally. But as things start to turn around, we're going to have to see whether or not people pile in. And remember, we just showed you that people like Michael Burry, not that he's the only investor out there, but his performance is pretty good. He's getting largely invested in companies outside of the US. Why? They're much cheaper. So the US is expensive. And if that perfect storm is brewing, we're probably going to have a little bit more downside here. So not trying to be doom and gloom today, but as I just showed you, after we broke our 6-day losing streak, all we had to do was put in one green day, form higher lows, and then form higher highs, which we saw in the weekly chart, and the pattern reversed. So what do we want to see now if we're bullish? Well, we want to see this level defend and form a higher high. Otherwise, bearish confirmation would come by putting in a succession of red days and printing lower highs and lower lows as we reverse or puke up this most recent move. All right, that's it for today's show. So you can either click on the left-hand side to watch another video or come hang out with me by subscribing on the right. And I'll see you guys at 9:15 to 9:30 a.m. tomorrow. Thank you very much.